In this video, we will discuss about issue of shares and its presentation into balance sheet also of the company. Till now, we were discussing only about issue of shares, their forfeiture, reissue, transfer of share forfeiture amount to capital reserve, and for this we were passing journal entries. Besides journal entries, there are situations, means besides journal entries, we also have to show or you can say present these things, the issue of shares in the balance sheet of the company. Also questions are asked regarding presentation of those things in the balance sheet also. So for this we have to know about the balance sheet of the company. Moreover, the whole balance sheet is not very important, means the balance sheet of the company is not very important. Only the things which are relevant with issue of shares, they are only to be presented in the balance sheet of the company, means that information only we will require. Now in the balance sheet of the company, the very first thing that appears is that, means in the balance sheet of the company some major headings are there, and beside major heading there are sub headings are there. Then first of all, the major headings in case of a balance sheet is the equity and liabilities, and under the equity and liabilities, share capitals appears. Under the equity and liabilities, share capital and reserve and surplus appear, which are relevant item with regard to accounting for share capital. Moreover, the other things which are relevant with regard to accounting for share capital is the, you can say, when shares are issued, as we know that we will be receiving some cash also, so it will also be recorded in the asset side of the balance sheet, means under the assets also as cash and cash equivalent. Means this cash and cash equivalent, it is part of the, you can say, current assets of the company. So only few things are required, which we will try to know how to present these things in the balance sheet of the company by taking an imaginary example. You can say, let us assume that a company Alpha Limited issued say 50,000 equity shares of rupees 10 each at a premium of rupees 2 per share, at a premium of 2 per share, and all the shares were subscribed and fully paid. Suppose this is a question. Alpha Limited issued 50,000 equity shares of rupees 10 each at a premium of rupees 10 each at a premium of 2 per share. All the shares were subscribed and fully paid, means all the shares were subscribed, means sold out, and it is fully paid also. Now these things will be presented in the balance sheet of the company. Let us see how. First of all, in the balance sheet of the company, very first the balance sheet is drawn, and beside the balance sheet, notes to account are also prepared. Let us see how this is done. First of all, balance sheet. Alpha Limited. As date is not given, so we are putting it there. Now see the balance sheet. First of all, there are two columns are there for the amount. The very first column is the current year, and next column is for the previous year figure. Then this is particulars. Then current year. Simply I am writing CY for current year, PY for previous year. PY for previous year. Very first, under the first heading is equity and liabilities. Equity and liabilities. Under equity and liabilities, first one is the share capital. Next, B is the reserve and surplus. Reserve and surplus. Now, these are the two relevant things under equity and liabilities. First is the share capital and next is the reserve and surplus. Why reserve and surplus? Because these shares are issued at a premium. 2 rupees is the premium. This premium is recorded under the reserve and surplus. Reserve and surplus, under reserve and surplus, the premium will be recorded. Now, since we will be also receiving some amount in the form of cash also, so this cash will form part of the current assets of the company. So, beside the equity and liabilities, the assets will also be written. This is the major heading, that is the equity and liability. Next is the assets. Under assets, very first, the non-current assets is written, and beside the non-current, later on current assets is written. Under current assets, the cash and cash equivalent will be written. Now, only current assets we will be writing here. That is the current assets. Current assets, and under current assets, cash and cash equivalent. Cash and cash equivalent. This will be. Now see, total 50,000 shares are there, and now it is of rupees 10 each. So share capital, in the share capital we will be writing 55 lakh. In the share capital we will be writing 5 lakh. Means 5 zeros. Since share capital 50,000, all the shares are sold out. So 50,000 shares into 10 rupees each, it will come to 50,000. Now one more column is there for note number is also there. Note number. This note number is for the explanation. Means in front of share capital we will be writing one. Why? This will be explained through notes to account. What are the things which are included in the share capital. Beside it, reserve and surplus, see it will be written as number 2. Now here the shares are issued at a premium of rupees 2 per share. So total premium will amount to 50,000 into 2. That is 1 lakh will be the premium amount which will be written here also. 1 lakh. Now cash and cash equivalent. 12 per shares will be received. 50,000 shares are there. 10 rupees of the shares and 2 rupees for the share capital. Means 10 rupees for the premium. Total will be 12 rupees per share will be received. And 50,000 shares are there. 12 5 is 60. Total cash in the company will be 6 lakh. This will be the total cash and cash equivalent. Now here also you can write. This is explanation. This is note number 3. Now the explanation of all these things. This is the note number. This note number is for explanation of all these things. Is what are the things which are included in, you can say, under share capital. Now its presentation is in the form. Now notes to account are also form part of the, you can say, balance sheet or financial statement. Notes to account are also part of the balance sheet, or you can say the financial statement of the company. Now notes to account. How it is prepared? From here let us write it. Notes to account. Now, first is the share capital. Now, note number 1. This is note number 1, and this is for share capital. So, we will be writing note to account. There is one number. It will be written as share capital because note number 1 it is related with share capital. Now, share capital. Under share capital, the various things which are mentioned are the authorized capital, issued capital, subscribed but not paid, subscribed but fully paid. All these things are mentioned. We will be writing one by one. First of all, it is mentioned as authorized capital is given. Authorized capital. Since in the question the authorized capital is not given, then also we will mention here the authorized capital. We will mention here. The number of shares is not mentioned, so we will retain ... shares of rupees 10 each. Since the number of authorized capital we do not know, the number of shares with which the company is you can say registered is not known, but the shares are of 10 each, that is clear. So we will not write anything. The amount here will remain blank. 2 lines will be drawn. Now, authorized capital, then issued capital. Issued capital. Now issued capital, here it is mentioned the company has issued 50,000 shares of rupees 10 each at a premium of rupees 2 per share. So here we can write the issued capital is 50,000 shares of rupees 10 each. It will come to 5 lakh. Now issued capital, then subscribed capital. Subscribed capital. Now all the shares which were issued were sold out, or you can say subscribed. So in the subscribed capital also the same thing will be written, 50,000 shares of rupees 10 each, fully paid. Fully paid. This is the subscribed capital. Now sometimes subscribed and fully paid and subscribed but not fully paid, these two things are all mentioned, but here all the shares have been fully subscribed and paid. So subscribed but not fully paid will not be mentioned here. Now let us come to the second notes to account, that is 2. It is related with the reserve and surplus. Reserve and surplus. Now, the explanation of this. What does this reserve and surplus indicate here? It is related with the securities premium which has been received at the rate of rupees 2 per share. So, here we will write securities premium reserve. Securities premium. Securities premium is 1 lakh. This is 1 lakh. Total, we can write here the total of this. It is not important also, but you can write here the total also. This is reserve and surplus. Now, the third, then is the cash and cash equivalent. You write third notes to account, cash and cash equivalent. What does this cash and cash equivalent represent? It refers to all the cash which is available in the bank balance of the company. So it will be written as cash at bank. Cash at bank. Total cash at bank is 6 lakh. This is the presentation of, you can say, the share capital, means issue of shares in the balance sheet of the company. First of the balance sheet is drawn, and the relevant things which are there, which is related with this question only, will be mentioned, especially when you are preparing the, you can say, balance sheet in case of accounting for share capital. So share capital, reserve and surplus, and under assets, current assets are the important things which are to be mentioned, and explanation of these things will be mentioned in the notes to account, which is also part of the financial statement of the company. And when you mention the share capital under this, the various things to be mentioned are the authorized capital, issued capital, subscribed capital. These things are to be separately mentioned. It is very clearly, even if the amount of authorized capital is not known, then also it should be mentioned. Issued capital, it is mentioned here. Subscribed capital, that is given. Sometimes subscribed and fully paid, subscribed and fully paid can also be there. So it will depend on the question. If the question is such that in the question it is mentioned that some shares are subscribed and fully paid, some are not subscribed and fully paid. So we will write separately for subscribed and fully paid. Under subscribed capital, you will write differently. There will be two parts. One will be for subscribed and fully paid, other will be subscribed but not fully paid. These things can also be there in the question. It will depend upon the question. Now we have come to this end of this chapter, that is the accounting for share capital. From the next video we will be starting the next chapter, that is the debentures.